Imagine making $1 billion on a single trade. Picture achieving this feat not once, but as part of a career spanning over 3 decades without a single losing year. This is the reality of Stanley Druckenmiller, a name synonymous with market mastery and consistent, extraordinary returns. He is a legend in the world of investing and trading. In this video, we will uncover the 7 timeless principles that have guided Druckenmiller's remarkable success. These are not fleeting tactics, but fundamental truths applicable to any market, any time. Whether you are a day trader, swing trader, retail investor, finance student, or are simply interested in markets, these principles offer invaluable insights. Let's delve into the mind of a market wizard. Born in 1953 into a middle-class family, Stanley Druckenmiller's journey to financial titan is a testament to intellect and relentless dedication. He initially pursued higher education with a focus on English and economics. However, his passion for markets led him to drop out of a PhD program to dive headfirst into the world of finance. This early decision set the stage for a groundbreaking career. He quickly made his mark, founding Duquesne Capital Management by the age of 28. This firm would become the vehicle for his legendary performance. For 3 decades, Duquesne Capital averaged an astonishing 30% annual return. This consistent performance placed him in an elite class of money managers. Remarkably, he achieved this incredible track record without ever experiencing a losing year. This speaks volumes about his risk management and strategic acumen. His most famous feat came in 1992 when he partnered with George Soros at the Quantum Fund. Together, they orchestrated a massive short position against the British pound. This bet, based on a deep understanding of economic fundamentals, paid off spectacularly on Black Wednesday. Druckenmiller personally earned $1 billion profit from this single trade. Today, Stanley Druckenmiller's net worth exceeds $6.8 billion. He continues to manage his wealth and investments through his family office, Duquesne Family Office. His career provides a rich case study in applying rigorous analysis and bold conviction to navigate the complexities of global markets. His principles offer a roadmap for aspiring traders and investors seeking long-term success. Druckenmiller is fundamentally a global macro trader. This means his investment decisions are based on analyzing and predicting large-scale economic and geopolitical trends. He meticulously studies key factors that influence entire markets and asset classes. These include interest rates, inflation rates, central bank policies, and significant geopolitical events. His famous bet against the British pound in 1992 is a prime example. It was based on a deep understanding of the UK's economic struggles and the unsustainable nature of its exchange rate mechanism policy. For aspiring traders, this principle means staying constantly informed about global economic indicators. Do not trade in a vacuum, understand the larger forces at play. Watch the actions and statements of major central banks, particularly the Federal Reserve. Monitor key economic data releases like GDP growth, employment figures, and inflation reports. Read widely on geopolitical risks and international trade dynamics. These factors can create significant market opportunities or pose substantial threats. Utilize professional tools and platforms like Bloomberg or TradingView to track economic trends and data in real time. Integrate macro analysis into your trading framework. When Stanley Druckenmiller has high conviction in a trade idea, he is not afraid to size up significantly. He believes in making big, concentrated bets when the analysis strongly supports the potential outcome. He famously quotes Andrew Carnegie, "Put all your eggs in one basket and watch that basket carefully." This encapsulates his philosophy of focusing capital on his highest confidence ideas. The 1992 pound trade exemplifies this principle. It wasn't a small speculative position, it was a calculated, massive bet totaling $10 billion against the currency. For traders, this means focusing your research and capital on a few high-confidence trades rather than diversifying into many low-conviction ideas. Deeply research your potential positions. Trust your analysis when it is thorough and compelling. When you are genuinely certain about a trade's potential, be prepared to go big, relative to your capital and risk tolerance. However, this principle is tightly linked with risk management. Always know your exit plan before entering a large position. Conviction must be paired with discipline. Concentration amplifies gains when you are right, but it also amplifies losses if you are wrong. This is why the next principle is equally critical. Protecting capital is paramount for long-term survival and success in the markets. Druckenmiller learned this crucial lesson early in his career, particularly from his time working with George Soros. A key method he employs is the use of tight stop-loss orders. These are predetermined points at which he will exit a losing trade to limit the downside. He is disciplined about cutting losing trades quickly. He does not let small losses fester into large ones, which is a common pitfall for many traders. A notable example occurred during the dot-com bubble. He initially shorted tech stocks but was caught in the late-stage rally and took losses. However, he quickly reassessed, pivoted, and began buying tech stocks as the bubble burst, ultimately making a 42% gain that year. His ability to admit he was wrong and preserve capital allowed him to capitalize on the subsequent move. For traders, setting stop losses on every position is non-negotiable. Determine your maximum acceptable loss before you enter a trade. Limit your position sizes relative to your total capital. Never risk too much on a single trade, even one with high conviction. Crucially, never let ego keep you in a losing trade. The market does not care about your opinion. If the price action goes against you, exit and protect your capital. While a macro trader at heart, Druckenmiller heavily relies on technical analysis to time his trades. He uses charts and technical indicators to identify optimal entry and exit points. He utilizes tools such as chart patterns, trend lines, and signals related to market liquidity. Technical analysis provides the tactical timing for his strategic macro views. He has stated, "I never use valuation to time the market. I use liquidity and technical analysis." This highlights the importance he places on price action and market structure for timing. Aspiring traders should learn the fundamentals of technical analysis. Understand how to read charts, identify trends, and use common indicators. Familiarize yourself with tools like moving averages, the relative strength index, RSI, and various candlestick patterns. These can provide valuable insights into market momentum and potential reversals. Practice using trading platforms like TradingView to apply technical analysis in real time. Backtest strategies using historical data. The power comes from combining macro insights with technical signals. Use your understanding of the big picture to identify potential opportunities, then use technical analysis to pinpoint precise entry and exit points. Markets are dynamic and constantly changing. Druckenmiller's long-term success is partly due to his ability to remain flexible and adapt his strategy as new information emerges or market conditions shift. He demonstrated this flexibility during the uncertainty of the 2000 US presidential election. He quickly reassessed his positions and pivoted into US Treasuries, making a 40% gain as markets reacted to the outcome. His experience during the dot-com bubble, mentioned earlier, also shows this adaptability. After taking losses on his initial short position, he didn't stubbornly hold on. He reassessed the situation and reversed his stance to profit from the subsequent decline. For traders, this means staying open to new information that might contradict your current thesis. Be willing to question your assumptions. Be prepared to adjust your strategy or even completely reverse your position if the market or underlying fundamentals change. Stubbornness is a costly trait in trading. If a trade isn't working and hits your stop loss, exit and move on. Do not double down on a losing position hoping it will turn around. This is often a path to significant losses. Stay informed using real-time news alerts and economic calendars. Be ready to react quickly to unexpected events that could impact your trades. Druckenmiller places a strong emphasis on liquidity as a primary driver of market movements. He believes that the availability and flow of money often dictate market direction more than traditional valuation metrics, especially in the short to medium term. He closely watches the actions of central banks, particularly their monetary policy decisions and balance sheet operations like bond buying programs, quantitative easing, or quantitative tightening. These actions directly impact market liquidity. For instance, he shorted bonds in 2023 based on his macro outlook combined with expectations of tightening liquidity conditions as central banks raised interest rates and reduced their balance sheets. For traders, this means tracking indicators of money supply and credit conditions. Pay attention to central bank announcements and meeting minutes. Understand how monetary policy impacts different asset classes. Increased liquidity often supports risk assets like stocks, while tightening liquidity can lead to declines. Utilize resources like the St. Louis Fed's FRED database or reports from major financial institutions that analyze global liquidity trends. Incorporate liquidity analysis into your macro framework. Perhaps the most nuanced principle is the balance between conviction and humility. Druckenmiller's career is marked by moments of bold, unwavering belief in his analysis, leading to large, concentrated bets. His decision to short the British pound or his early investment in Nvidia, recognizing its potential long before many others, demonstrate this high conviction. When he sees a clear opportunity based on his principles, he acts decisively and with size. However, this conviction is tempered by profound humility. He possesses the crucial ability to admit when he is wrong and quickly change course. His experience in the dot-com bubble is a prime example of humility saving him from disaster. For traders, this means trusting your research and analysis when it leads you to a high-conviction trade idea. Don't be afraid to size up appropriately when the signal is strong and aligns with your risk management. Simultaneously, cultivate intellectual humility. Stay open to the possibility that you might be wrong. The market is the ultimate arbiter, and its judgment is final. Keep a trading journal to reflect on your decisions, both winning and losing. Analyze what worked and what didn't, and learn from your mistakes without letting ego interfere. Never let pride cloud your judgment. Your goal is to make money, not to be right all the time. Humility allows you to adapt and survive drawdowns. Stanley Druckenmiller's extraordinary career is built upon a foundation of these 7 timeless principles. Mastering the macro, making concentrated bets, prioritizing capital preservation, embracing technical analysis, staying flexible, focusing on liquidity, and combining conviction with humility. These are the pillars that have allowed him to navigate complex markets and achieve legendary status. They are not secrets, but disciplines that require dedication and practice. Aspiring traders and investors can absolutely apply these lessons to their own endeavors. Start by studying these principles in depth and gradually integrating them into your trading process. Begin with smaller position sizes as you learn. Study hard, analyze diligently, and trade smart by adhering to your principles and managing your risk. If you found these insights valuable and want to learn more about market legends and trading strategies, be sure to subscribe. Build your understanding, hone your skills, and forge your own path to becoming a market wizard.